All right, it's 6:01, so we'll get started. Welcome to Forex for Beginners. We do this class, hi Camille. We do this class once a week, and there's so much that Epic has to offer. Shout out to Coach Max. She's totally revamped the back office, so make sure you check it out. So much value back there in our back office. And also, I don't know if you've noticed, guys, but shout out to the Epic trading team because the signals have been just fire this week. I know there's a new trader who has our leader's same name. So we have Damo, and then there's Dominique as well. So her signals have just been on fire this week. So I'm going to check out her recorded call. I know in the trade-off, I think she was yesterday morning. So I definitely want to check out what she has to offer and take a look at her chart analysis because I don't think she's lost a trade this week. I really don't. I could be wrong, but I've been taking some myself. Has anyone else taken her trades? You can either come off mute or type it in the chat if you have. And I know some people were confused thinking that it was our Domo. So I think he shows up as Dom or Domo in the Epic Forex signals, and her whole name, Dominique, is spelled out. So that's how you can tell the difference. All right. And so there's the back office, the Epic Forex signals, and then we're also a part of Coach Max and Ryan's downline, Dynasty Exchange, or DX for short. And that trade channel is live and popping. So if you want a lot of energy and a lot of interaction about your trades and what's going on with the various strategies and just Epic in general, the DX chat is the place to be. It's very, very active and high energy, and there's a lot of value in there as well. So Coach Max sent out links via email. So check your link to make sure you have the latest telegram. I know it was updated about maybe a month ago. And then we are Impact Over Profits. We're Domo 30 is our leader, Impact Over Profits. And so we have value here as well. A little bit more laid back, but there's definitely a place for you to plug in where you feel comfortable at Epic. So that's just a nice introduction. So what we've been doing the past few weeks, and we're gonna keep it going, is basic chart analysis. I think, when I look at my team and how long, I've been trading a few years now, I think one big hurdle that a lot of traders have is being able to take that jump or take that leap from listening to the live classes and studying, maybe the Candlestick Bible, which is really good. I read that over the weekend again, really good reading. I think sometimes it takes a bigger leap to go from studying and going to live classes to actually being able to pull up a chart in TradingView yourself and do some beginner analysis. So that's what we want to remove the stigma that that's really difficult and that is really challenging. So that's what we're going to do week in and week out. Pull up a few basic pairs with just a few indicators, which I'll share my TradingView screen in just a second, and just talk through knowing what to look for and knowing, where price is, and just start thinking about some possible trades that you can take. And it doesn't matter if you're, it's okay if you're not in your live account yet. You can take these trades in demo. You can use icons to mark where you would place a trade, come back sometime later and see how that trade would have played out. So there are lots of ways that you can safely study and begin to see what trades you would take without being in your live account. So give me a second. And okay, now we're looking at TradingView. Give my screen a chance to catch up. And if you have any questions, post them in the chat. I'll go over this for about maybe 15 or 20 minutes, and then we'll open it up for Q&A. We like to go about a half hour, maybe 45 minutes. There's so much going on with all the classes between the Epic back office and DX. We want to give you as much time back as we can. Okay, let me make sure the screen sharing is working. Place a 1 in the chat if you can see my trading view. Just to let me know the audio is good. Okay, great. Thanks, Kawana. My phone is just having a hard time connecting. All right, so here we are. We're looking at trading view. And remember, the way to get started, up in the left-hand corner, that's where you type in your Forex pair, the asset that you want to look at. And then you come to the right and you select your time frame. We kind of like to start at the 1 hour. Now in your back office, you know, there will be plenty of videos that explain the full top-down analysis, how you can start at the daily and mark your levels and go down to the 4 hour and then the 1 hour. We're just gonna take a snapshot of that and just kind of start on the 1 hour just to show you how to do it. And we have 2 main indicators that we've been using. The 50 EMA, which is the kind of turquoise blue one. And then this golden kind of honey mustard color is the 200 EMA. So let me write that down so you can see it. We have the 50 exponential moving average. And then we're going to mark the second EMA as the 200. And I'll color code this one with orange so that they match a little bit. And let's go over quickly how to add these EMAs to your chart. You're going to click on the FX icon, which is indicators and strategies. You're going to type in, now there's several ways to do it. The indicator that I like to recommend is really good for those who have free accounts. Because if you don't use this indicator, if you just type in, I think you can type in moving average. And this will add 1. If you select this third one down, this will add 1 moving average. And then for the second moving average, you would have to go and add that again to your chart. Now, so to avoid that, because with the free trading view, I believe you only get 3 indicators. So I'm going to show you one that gives you multiple moving averages in one. So it kind of helps you out that way. And so under FX, you're going to type in 4XLG. And we want to click on the blue part, 4XLG EMA setup. So you click on that 4XLG, it'll add it here to your chart. Click on the settings. And look, these are all the moving averages that you can show on your chart. And each one is kind of nicknamed. The EMAs have a nickname depending on their length. So we're going to focus on 2. So the 50 EMA, its nickname is the water, and the 200 EMA, its nickname is the mayo. Not sure of the origin of those nicknames. So under inputs, the 50 is the length of the EMA, and then the 200. So those are the 2 that we want. So later at another point, if you want to add additional ones, you simply check them here. But as you can see, just to keep things simple, we're going to have the 50 and the 200 selected. And here is where you can choose your color as well as the thickness of the lines. Okay. So here's our chart. We're on USDJPY looking at the 1 hour. We have our 50 EMA and our 200. So our general rule of trading is that when we say price, we mean these candles. When price is above the 50, we are looking to buy. Let's write that down. So buy when price is above the 50, and we're going to sell when price is below the 50. So that's sort of our general rule that we're going to follow. And we've talked about this before, but when these EMA cross, when the 50 EMA and the 200 EMA cross, those are really some signal points. And that's when we really want to pay attention. Now, when the 50 crosses up over the 200, that's known, and we've talked about it before, but I don't think I told you what the name is. That's called the golden cross. That's when the 50 crosses above the 200. Okay, and then we also want to talk about the death cross, and that's when the 50 crosses below the 200. Okay, so the golden cross and the death cross. Now, if you notice, I am really zoomed out of my chart. I'll show you how to do that. When you just come to the bottom of your trading view screen, now you can see this minus and plus. So the minus is how you zoom out. And if I want a closer look, have the candles a little bigger, then I'm just going to zoom in. Okay, so you can zoom out. And I want to talk to you guys about a trade that I took today that failed. And I want to talk about what happened and any mistakes that were made, any good points and bad points. So I was looking at UJ today, so we can all see, type in the chat, what trend are we in? And you got three possibilities: uptrend, downtrend, or sideways, which we call consolidation. So type in the chat and tell me which trend are we in. Yes, thank you, Kawana. We are in an uptrend. And if you notice, and that's why I zoomed out, because you can, a lot of times if you're not zoomed out, you may not get the trend right. So what if I was only looking at that? If I only saw this view of the chart on the 1 hour, then what trend would it look like? Let's say it was March 8th. Yeah, let's say it was on March 8th. If I'm starting here and I'm looking from there to there, what trend would I say price was in? Would I still say uptrend? If I'm looking at price between these two blue arrows, would I say uptrend, downtrend, or consolidation? Yeah, it's sideways, exactly. So sometimes it's really good to, when you first bring up your chart, just really zoom out so that the candles are super small, but you can get a really good idea of what price is doing. So we've, identified price was in an uptrend. I was looking to get in after a pullback and, take a buy. And we've talked about it before, but let's just make sure you know what a pullback is. So from here to here, price is, a pullback is like a small reversal. So we're in an uptrend, so price is going up, but price just doesn't go in one straight line. Price moves in zigzags, sort of stair steps. So in an uptrend, it's gonna go up a few steps, then it's gonna come back one or two. Then it's gonna go up a few more steps, then it's gonna come back. So every time it comes back, we call that a pullback or retracement. So the cool thing about retracements and pullbacks, they're not cool when you're watching your MT4, because every time you start a pullback or a retracement, your profit is going to decrease, right? You're still winning the trade. You're probably still in blue, but every time you hit one of these pullbacks or retracements, you see your money dip down. So the one plus about a pullback or a retracement is that it allows you to get into the trend if you missed it at the very beginning. So the cool thing about price is when you have a nice long trend like we're seeing now, you don't the good news is it's not like you have to catch the train at this station, else there's no other way to get on the train. No, the train has multiple stops. You can keep getting on. So we want to take a look at these pullbacks. I'm going to mark them with the blue arrows. So here's the start of another pullback, and there's the end. So we had a pullback from here to here. We had a pullback from here to here. And when the pullback is over, that allows us to get back in, to make an entry into this uptrend. So if you notice, what do we have here? I'm going to mark this with a different color arrow. Let's label this arrow as green. At this point, the 50 and the 200 EMA cross. So what kind of cross do we have here? Is it a golden cross or a death cross? Type it in the chat if you can. Where this green arrow is, you have the 50 EMA, and it looks to be crossing over, up, and above the 200. So this is the golden cross. That means we are looking for buys, because if you look to the left, you can see that we were probably in a sell because price for the most part is kind of below the 50 EMA. So when the 50 EMA crosses the 200, typically that's a good indication that we are about to start an uptrend. But what if you weren't at your chart when this happened? Now you're going to wait for a pullback, and I'm going to zoom in a little bit. So you're going to wait for a pullback. Price has fallen under the 50 EMA. And when it crosses back over, as well as you have to kind of watch out for these fake crosses. So the 50 crosses to 200, which we know as the death cross, which we think is the beginning of a downtrend. It was really just a fake out, because price is going to immediately, just a few hours later, come back above the 50, and the blue crosses up against the over the 200 EMA. So, we call those fake crosses, fake outs. They happen. You just have to keep looking at price action. So here is kind of the first big pullback in this uptrend. Now, once price is above the 50 and you have this 50 crossing the 200, now we can consider getting in for a buy. So let's use let's choose purple for our entries. We're going to call it purple. All right, so let me see if I can make this a little bigger. Here we go. So now price is above the 50 EMA. It broke through, kind of gave us a pullback. And you know how we've been talking about break and retest, like off your support and resistance zones or off a trend line? You can also use break and retest on a 50 EMA. So here price kind of broke through the 50 EMA, and it pulled back to, it didn't really touch it, but it's kind of close enough. So we could take our entry here. Price takes off for a bit, and this, last week we talked about the different trading styles. You can either stay in for your 10 or 20 pips, 20 pips and dip, and be out of the market if you are scalping. Or maybe you want to be a day trader where you want to stay in maybe for a few hours, maybe to the next day. Or you can be a swing trader where you're just going to ride the trend until this uptrend is over. So in this case, we had a pullback, price retraced down to the 50. This gives us another entry if we missed it before. So there's a place that we could enter. Okay, so at this point, We are in the trade. We get a nice rise up. How many pips is that? So if we started, let's say here, that's 105.25 up to 106.20.15. That's about 90 pips, just 10 pips short of 100. So that is a nice trade. So you entered this trade, let's see, February 21st, February 16th. You can look down at the bottom and see the time frame. And it took until, okay, so let's look at our time frame. This is probably 5 a.m. because I'm East Coast, 5 a.m. here if you were able to catch it, if you were up. And by 8 p.m., then that trade would have been finished. So that was 5 a.m. Now we're at noon. Yeah, until about 8 p.m. So not bad for an intraday trade. Not bad for this buy. And so then price pulls back again. So we're going to mark our pullbacks in blue. So from here, marking our pullbacks in blue all the way to, let's say here. So that was pretty much a big pullback. Okay, we'd already marked it there. A little bit of an uptrend, and then we had another pullback here. And now we were in a bigger uptrend. So these are some examples of how you can pull up your chart, add on your 50 EMA, your 200 EMA. You can either wait for a golden cross for the 50 to cross over the 200 and look for an entry there, or you can just use the 50. You can make it even simpler. And so when price is above the 50, you can look for a buy, after a retest of the 50, and you can get in that way. So the trade that I wanted to show you today, let's see, where were we? Where was I today when I saw it? Well, I think I want to show you the difference between how price looks on the 1 hour versus the 5 minutes. So maybe you've heard of traders suggesting that when it's time to make your entry, you go down to a lower time frame. A lot of times you can see a break and retest a lot earlier on a smaller time frame. So let's take a look at this nice big uptrend and see how it looks on the 5 minute. So here we are today. Yeah, so this is current price here. And so if we jump down to the 5 minute, yeah, now I can see. Yeah, so what happened with my trade today? Let me draw a nice little brush. This is what I got caught in today, and I hit my stop loss. So let's talk about all the reasons why maybe this was a positive trade and if there were any warning signs. So as you can see, on the 1 hour time frame, we are clearly still in an uptrend, right? But you can see this basic bottom wick. So we were talking about this USDJPY trade that I took today that was not successful, that hit my stop loss. And I wanted to, before we wrap up, just kind of analyze it. So looking from the vantage point of the 1 hour time frame, we're clearly still in an uptrend. So this little green circle that I circled here, it shows this long kind of bottom wick. That's what hit my stop loss. So I'm going to drop down to the 5 minutes so we can see what was going on a smaller scale. Okay, great. So the goal was for price to sort of bounce off this 200 EMA. I also had a nice trend line. I'll draw that and show you what I was looking at. I believe my trend line looked something like this. So I was able to capture these points here where the candles were touching my trend line. And I realized that it didn't quite touch it here. So what I was hoping for was that price was going to sort of bounce off the 200 EMA and then continue in an upward motion. But what happened was once I was in the buy, price came, and I'll use an arrow. Price just barreled down through my trend line, through that 200 EMA. And can you imagine being in the trade and seeing this wick while the candle is forming? It looks like a candle body. You only know that it's a wick after the candle closes, which is a good idea to just enter and exit trades after the candle closes. So what happened, I did not do that. And I saw this huge engulfing candle breaking through my trend zone, through my trend line. And it kind of freaked me out. And I said, oh my gosh, price is reversing on me. And so what happened? It was a fake out. I encountered a fake out today. Because as you can tell from this 1 hour trend, that the uptrend is doing just fine and dandy. This is what's known as a fake out. And let me tell you, it worked. I was pretty much faked out down here looking at the 5 minute chart. So here's, in hindsight, here's what I could have looked at. Let's talk about when I entered my trade. I think I entered somewhere around here when the candles were blue. Let's talk about where structure is and where I should have set my stop loss. Now, looking at my trend line, you know, my stop loss was somewhere around here. And I'm just going to label that in red, and let's make it dotted or dashed. So here was my entry, and I had a nice, comfortable, maybe 20 pips or so stop loss. So Chris is saying in the chat, 9 a.m. orange folder news, bad for USD pending home sales. Yeah, this was around 10. So I thought I was in the clear. It was a little bit out of after 10. So I thought I was clear of the news. So I thought this stop loss was relatively good. But if I look at more of the chart, then there is a nice structural zone here. So we're going to mark that zone maybe in a gray, and let's make it a solid line. Yeah, so perhaps, and there's also another zone here. So in setting that stop loss, perhaps I should have made my stop loss a little deeper to cover these structural points, either under this structural point or under this one. Now, at the time, I was taking a scalp. So I was only looking to make 20 or 30 pips. So I was considering my risk to reward ratio, which is why I didn't consider any stop losses this far away. But I just wanted to let you know, or give you an example of a fake out. So had my stop loss been increased by like maybe 10, 12 points, then it would not have been hit. And I still would have been in the trade and probably would have been at break even. I imagine as we get to the Asia session, we're approaching it now. I'm assuming that UJ will kick up and continue its uptrend at that point, or not. But I wanted to give you an example of a fake out trade, and just know that, you know, I talk a lot about trend lines. Just because price breaks out of a trend line, it doesn't mean that the trend is over and that you should hop out of the buy and jump straight into the sell. It's a good idea to kind of give it some time, and that way you can avoid fake outs. So are there any questions? Any questions about this trade, about the fake out, about the golden cross or the death cross, about zooming in versus zooming out? All right, I see we have Miss Savvy on the call, and you guys make sure you're taking advantage of her Saturday classes when they are posted. Savvy, you're going every other Saturday, correct?
Kind of. This has been a crazy month for me, so I know I'm not doing one this Saturday, but I'm gonna try to get one done next Saturday.
Awesome, awesome. I can't wait. I will be there. I love the last one you did on TradingView. If you guys have any questions about anything at all related to TradingView, Savvy covered it on one of her last trainings. It was really, really good.
Thank you.
Yeah, absolutely. So Savvy, yes, I was faked out today on this UJ buy. Look at all the different times that I could have entered. The one time that I entered is when I got the fake out.
Yeah, she got you.
Yeah, she got me. She got me. But you know, the good news is I had a relatively tight stop loss. It hit it, you know. It's
hey, that's a part of the game, right?
Yeah. The important part is that I think the analysis, you know, was valid. We're in an uptrend, so
right.
Yeah,
absolutely.
I wanted to talk about, you know, my thought process in taking the trade. And yes, we have losses. There's nothing you can do to prevent losses, even when your analysis may be accurate.
Absolutely.
Yep. So I think it's important for us to talk about, you know, the losses and not just the wins, as you know, too, so that we're given, you know, a real picture of what it's like to be a trader. No one wins every trade. All right, you guys. So if there are no questions, I will get this posted to my YouTube site probably by tomorrow. Make sure you are plugging in. Keep an eye out on those Epic Forex signals because they have been really good this week, really, really good. And I will see you guys in the chats.
All right.
Okay, bye-bye.